The one thing that we're in final testing phase at the moment for is Bitcoin Payroll. So that will effectively see any business, so businesses that we onboard, but also much larger corporate entities, typically with north of 500 employees, having the ability to pay their staff and their workforce in Bitcoin. Now, it's not going to be tax efficient, but instead of issuing perhaps a £50 DIY voucher or some sort of afternoon tea at the Ritz for an incentive or a bonus, for the first time, companies can onboard with our payroll solution and cascade or pay their staff instantly in Bitcoin. So the idea being then that we have hundreds and hundreds more users of Bitcoin, or people that have been awarded it, that are now incentivized to spend it. So our mission again is making sure that use of Bitcoin as money is something that we don't miss out on, because I think as amazing, and we'll come on to Treasuries shortly, as amazing as an asset Bitcoin is, we have to remember that it's freedom money at the end of the day. If we lose the ability to spend it, then I would argue that the value of Bitcoin is enormously eroded. I mean, in the general sense, the monetary value will continue to go up no matter what. That seems absolutely in question, without question. But I think we absolutely have to work hard to defend the ability to use it in everyday trade. Maybe we don't need it today. Maybe it's not absolutely essential, and that's why we've built it in a system that can work seamlessly alongside all of your current payment methods. But there may well be a time, and we're seeing an enormous lurch towards a degree of authoritarianism in politics at the moment. And we know for the first time we've got the technical toolkit. We see it in other countries around the world where social credit scoring is applied, and linking social credit scoring to financial systems puts you in perilous danger of constantly being debanked, of having wrongthink, and the government effectively mandating and controlling how people behave in society, what they think, and how much they buy, or what they buy in whatever quantity. So I think we almost can't, I would argue that we can't wait too long. I'd almost argue that we can't wait at all to make sure that the right to purchase goods and services using ideally freedom money is defended and is disseminated in every single business. Because only if we can push back on any kind of social credit scoring or deplatforming risks can we actually protect ourselves from it. If you try and implement it later, it's too late. But you can effectively challenge any policy decisions that a government might want to move forward with if you've already got the toolkit out there to push back.
Mm-hmm. We kind of touched on it a little bit with the discussion with Adrian, but I'm curious about just the infrastructure of payments, and sort of you had mentioned incorporating Bitcoin into that. Would you mind maybe kind of helping us understand what we have right now, how it's going to be, how Musqet kind of comes into play with that?
Yeah, I'll hand off to Adrian on that one, because I think that the four-party card model is something that people may be loosely aware of, but it's not obvious to them.
Yeah, what is the four-party card model?
Yeah, and bear in mind, everything we use today, cards, iPhone, Google Pay, all use the same set of legacy bank clearing systems in the middle.
Okay.
So all the innovation since the 1960s has been built on what was originally, and it was always young lads running around London with bags full of cheques. Cheques for the other banks, and that was the clearing. So at the end of the day, you cleared the cheques between the banks. And so banks would accept cheques drawn on their accounts from other banks that had cashed them, and then there would be a settlement at the end of day.
Somebody else ran around with bags of money?
Well, there was a bit of that going on. In fact, it was moved inside the Bank of England, so it was moved from one vault to another, a bit like Gringotts, I suppose. It was sort of Harry Potterish. What happened in the 60s was that process was automated, and that was the Bankers Automated Clearing System that was built.
Did that become phone calls?
It became a computer system with some phone calls.
Okay.
And so we're sort of getting into the early stages of IT. Expensive and clunky, but it worked, and it was cheaper and safer than young lads running around with bags full of cheques. And then There was an update program in the 1990s that moved BACS into a much stronger footing, and BACS remains one of the most effective clearings. Faster payments came along after that, and faster payments is built on bits of the ATM network and the banker's automated clearing system.
Can I ask how SWIFT comes into play?
So SWIFT is an international clearing system.
I see, so similar but international.
Yeah,
Okay, got it.
And works on much higher values. You know, it moves millions and trillions of pounds around, whereas the UK clearings are designed for domestic movements of money.
Got it.
So the card schemes came along starting in really the 60s with the early ATM cards and debit cards. And what your payment card is a means of giving an instruction to your bank. That instruction is taken these days by tapping your card on the terminal, sometimes proving who you are by entering your PIN, sometimes proving by the fact you have your phone with you and you've entered your fingerprint or face print, and that's allowed you to open up the phone application. That instruction flows to what is called a merchant acquirer. They're a bank, and they operate the infrastructure that allows you to accept that instruction at point of sale with a terminal or some other mechanism, an e-commerce website. That instruction to pay the merchant from me travels to the acquirer. It then, within normally a 12-hour cycle, sometimes 24, travels to the relevant bank that gave me my payment card. So that bank may not be in my country, of course, where I've spent the money. I might be traveling the world, in which case that instruction has to travel to that bank overnight, and the bank that receives that instruction decides whether or not to honour the payment. And there are reasons why they won't. It might be fraud. It might be suspect. I may not be allowed to buy those goods or services. If it's an expense card and I'm trying to use it in some seedy joint somewhere, it'll get declined. Now, sitting inside this, there's a almost instantaneous authorization service that goes on, which means you may not be allowed to do the transaction anyway there and then. At the end of the day, the bank that's received my request to pay the merchant gathers them up with all the other requests they've had from all their cardholders, agrees to 99.9% of them, and remits the balance of funding through the card schemes via the international settlement networks, which, for example, is used. And that money is then received by the merchant acquirer, who works out how much of it is due to the particular merchant that I spent my money in, and that money is then sent in aggregate, so it's not individual transactions, it's just an aggregate amount of money for the day to the merchant. And
it's a lot of steps.
A lot of steps. It's an account-based system, so it consists of lots of ledgers. There's a ledger that, in essence, the merchant has. There's a ledger that the merchant acquirer has. There's a global ledger the schemes operate between all of their banks, and then the card issuer has a ledger. And then if you're an assiduous customer, and like my mum, for example, who notes every single transaction in a book
has
separately.
her own ledger,
Which it's great, she's never been ripped off, but marvellous. Everyone's running ledgers, and ledgers are expensive and cumbersome. And notice that everything in that process is delayed. The movement of the data related to the transaction is delayed for each party, apart from the authorization message, which is practically real time, even on a global basis. It's quite an extraordinary capability that schemes have built. The movement of money is at best within 12 hours, but it can be 3 days. And so what we have at the moment in the world's retail payments infrastructure is a 1960s system built on the idea of young boys running around London with cheques that has been built on layer on layer on layer. And, Apple and Google, for all their technical excellence, have just added another layer to, if you think of it as an onion, this onion's very, very big now, lots of layers. Each layer takes adds a bit of cost to the whole thing, and a bit of delay and a bit of complexity. And some of the bits in the middle are quite old. In this country, we've had various renewal programs, but in many countries, the clearings are legacy stuff going back a long way, and so they limit what you can do with innovation in payments. So when we're looking at what we're doing, we're using the bit that is really well established and everyone loves, which is the terminal at point of sale and the ability to scan a QR code or tap and pay.
Talking of that, which is a great segue, can we get a demonstration of it?
We can. Here's one I made earlier. I don't know whether you want to potentially put this out to your viewers. It depends how many live stream viewers you have.
So yeah, would you
if it's
be talking
possible to zoom in?
Okay, that's a good spot, Anton's saying.
Okay, I'll hold it there. You guys can carry on talking.
And we're going to zoom in. Yes, yeah. And would you mind just sort of just explaining how it works practically, and how it kind of fits in, how you...
Yeah, so what's happening here is, this is our payment terminal.
Can you move it to your left, please? There it is. Yeah, perfect.
You zoom in a little bit on that. It might render...
Is it possible to zoom in anymore?
In a detailed enough way for your internet viewers to pay a 1 penny invoice. It's not going to break the bank. So if there's anyone watching wants to see the demo, then feel free. If not, I shall step in. So what's happening here is this is your payment device. The step that you didn't see before this was you have a home screen with 2 options, pay by card or pay by Bitcoin. I selected pay by Bitcoin and I entered the amount, so that in this case it was 1 penny, and a QR code pops up. What's happening in the background there is the merchant, we've already onboarded them and set them up with both the card and a Bitcoin account. We've provisioned a Lightning node for them, so we partner with an entity right now called Voltage. So they provide all of our Lightning nodes in the cloud for each merchant. The merchant themselves contribute liquidity, so we open the channel. Musqet is the final node on the network, so the final hop as the payment comes through from customers. And that means effectively we can open a direct channel in a hub and spoke model that goes from us to each merchant. Each merchant therefore has their own Bitcoin. Typically we advise around about 1.5 million sats as a minimum, but that's theirs. You know, that at their point is it's theirs, their channel. And
so sorry, what do you mean? They have 1.5 million sats in their account that they have to keep there?
Correct.
Okay.
Yeah. So that's part of the onboarding process, and we are looking at ways. You mentioned innovation before. At ways to do that without having to have deposits, but I think that infrastructure and facilities to do that are still emerging right now.
Is it like a security measure to have that?
It's the only way to operate without being a custodian. So
interesting.
It's the way that we manage to operate outside of the FCA regulations without having to become a crypto asset provider.
Got it.
We will eventually, in time, do that, get our license, make sure everything is fully approved, and be able to operate as a custodian if needed. But again, our preference is not. Our preference is that this is a direct relationship between a customer and a business.